Good morning, Wall Street winners. It is Wednesday, April 17th, and as we look to what's going on in the futures this morning, we've got all of the indexes in the green, which is a positive way to start the morning. Not up significantly, but the Dow Jones up a quarter of a point, S&P 500 up a third of a point, the NASDAQ up a fifth of a point. So we're looking like we're going to go into the session in the green and in the positive, despite some of the commentary and narrative in the markets. We heard from Jerome Powell, the Fed chairman, yesterday that it's likely with the data points that we're starting to see, indicating that interest rates are not bringing inflation down to their target 2% range, that interest rates will remain higher for longer. And that's rattling the markets a little bit. There's definitely been some pullbacks in different sectors. If we look at crude, crude is pulling back. I don't think it's because of interest rates there. It's just had a good run in a fairly short period of time in the first quarter of the year, and it's probably just finding a rebalancing level before it moves forward again. But we're also seeing in the tech sector, particularly maybe in the semiconductor space, we've seen a little bit of pullback. We also tend to see pullback at this time of year as we enter a second or a new earnings cycle. And as we start to hear the earnings from different companies, we'll often see that pullback corrects and we see a pull forward and a positive gain within different sectors. So we're seeing that retail sales have actually been pretty good. And again, it's hard to see a reflection in this on a day-to-day basis, but you can see that there's some positive activity in some of the retail stocks that we follow here. It's more of an inching back towards maybe where these stocks were. I mean, if we look at Lululemon as an example, and we look at the 6-month chart, you can see that this was a $500 stock last month, and now it's a $338 stock. So it probably wasn't valued properly in either of those price points, and it's just trying to find a value-based ground to get back to. So this is clawing back a little bit with a marginal gain. You've got Dollar General inching up as well. You've got Walmart looking like it's moving forward, Home Depot, Nike, which again had some less than stellar forecasts for the year. Not that the revenue and EBITDA numbers were extremely bad, but you're just seeing that they were forecasting for weaker sales than maybe originally projected. And so they took a hit. If we look back a month, you can see on March 20th, the drop there around their earnings. And then it's continued down and now it's slowly recovering and moving its way back up. The healthcare stocks, we're starting to see some earnings from those. This is an interesting one in that we're seeing that these, in some cases like Humana, have dropped off significantly and continued to drop throughout the last 6 months, but they're probably going to start to turn around. We'll know more in 7 days, a week from today, when they report earnings, and we'll see what's coming out of some of the healthcare. HCA, 9 days. So again, we'll have a look at that. And then I think Cardinal, have they reported already? No, May 2nd is when they report. So we did see one of the other healthcare, I can't remember the name, just report the other day, and they had positive earnings. JB Hunt off $13 pre-market. So this is an interesting one. That's a pretty significant drop here, and it could be because we've had some earnings out from them and they weren't positive. So I wasn't following this from an earnings perspective, but yeah, it looks like they'd released some earnings and the revenue missed, earnings and revenue missed estimates. So that's bringing that down. And this is the transport cycle or sector is interesting because it really speaks to the flow of goods throughout North America rail is and trucking are the two primary means of distributing goods throughout North America. Even with inbound shipping containers, they then often are thrown on trucks and on rail cars to get to their final destination if it's not along or close to an ocean port. And seeing that fall that much, it could be a predictor of some other earnings releases that are expected this week. I believe another one, if we look at it, is CSX, which is another company involved in transportation, and we've got earnings set today for CSX. So it'll be interesting to see what comes out of CSX and whether that kind of lines up with where we are, what we're seeing from JB Hunt. So if you wanted an interesting transport play, you may look at a short on CSX if you feel that it's going to have poor earnings and revenue like JB Hunt. Or you might buy a put on CSX, planning for that stock to go down on poor earnings. You may also look at buying a forward call on JB Hunt now that it has dropped. Now, this is earnings were just announced in the last day or so. We might see that it falls a little bit further. So if it does fall a little bit further, but you think there's going to be a recovery coming, you may look at putting a long-term call. Long-term could be 6 months or a year out, and a call, again, as we talked about on other sessions, is when you purchase an option to buy the stock at a price in the future on that future date. So maybe you think that JB Hunt will get back to $190 in 6 months. You could buy a call on that, and that call may be worth $8 or $9 or $10 today based on the price that it's selling at. It could be worth less, it could be worth more. It all depends on the price that it's selling at and the price that you're willing to pay into the future, as well as how far in the future that is. And then we get down to oil. Oil is definitely experiencing a bit of a pullback. So some interesting options here. No, it's not oil, it's utilities, but I am a big fan of Consolidated Edison. And when I see this stock sitting at 87.42, this is something that I would certainly look at acquiring and holding, maybe even through to earnings on May 2nd. You can see that earnings date is 5/2, but I think you'll be able to get out of this much sooner than that at a $2 or $3 profit, which is 2 or 3% on that, which is a good return. And that's kind of what we're looking for in the model that and the methodology we follow. So this stock has come down in 5 days. It's at a 5-day low right now. If you look at the 1 month, it's a fairly choppy stock or volatile stock for a utility. And utilities are typically pretty consistent. But as this stock comes down around this low 87 level, even over 6 months, you can see that you're basically down towards the bottom of where the stock has gone. 86.71 here, 86.18 over here, 87.43. So if we're back at 87.40, it's very likely that you're near the bottom here and that this is going to trickle back up into the 90 or even the 91 kind of range. And that's a nice little gain. And as you can see, it can happen within 30 days or less. So I would definitely be looking at picking up some Consolidated Edison today. I'm going to stay away from the rest of the oil stocks at this point until we start to see crude turn around. And we've talked about in previous recordings, there's a lot going on in oil, especially with the Middle East and everything there. But as demand picks up in the summer in North America, I'm confident we're going to see oil rebound. We've seen a pullback in tech. So I've been looking at and been purchasing and selling things like CRM at a deep discount. It went down to 272 recently as yesterday. It opened at 272 and have ridden that back up, put some calls in on that for the 290 range or 300 range out a few months. Palo Alto, another favorite of mine, has hit some lows. I think these are due to rebound to the $300 range within the next 30 days. If we look down further, I think ARM is interesting. I'm a little leery now about ARM, and I have been playing NVIDIA as well, but probably going to hold off on those because we have had some news out of Taiwan Semiconductor, or ASML, about chip orders being down in the quarter, and that could affect companies like Lam Research, which we're seeing down almost 2% pre-market. It could affect others like Broadcom. It could affect other chip manufacturers as well. So staying away from that. I was in and out of Meta yesterday. Meta in the 400s, in the 490s, I think is attractive. I think we're going to see in 7 days some phenomenal results out of this company, which I would expect could push that stock into the 530 range. I think Netflix reports tomorrow, and I've never been a big Netflix investor. I missed that boat. And although it is really turned into a major studio type of organization and producer of content, I'm still a little leery of where they are. And a lot of their growth is to do with new subscriptions. I'm just not sure where those are coming from. But I don't look into that, so I can't speak to that. But I stay away from that one myself. But there is a lot of movement and opportunity there. NVIDIA up 14 yesterday, but down at the 860 level at the start. Again, a lot of volatility, so there's a lot of opportunity for play, but it is an expensive stock. And if you're looking at volatility, you have to be willing to have it swing both ways on you. So you just want to be careful in there. But if it does drop down to the 860s, I would definitely look at picking some of that up and trying to ride the wave back up to 900. Google has fallen out of the 160s back into the 150s. I love Google as a long-term hold. I think there's very little that's going to go wrong there. They're well positioned for AI. And then as we get into financials to kind of close out today's overview and pre-market update, we've got a lot of these companies updating early or announcing earnings early in the quarterly cycle, and the earnings have been fairly positive for the most part, even though we've seen the stocks fall. So, I mean, JP Morgan was a $200 stock a week ago, and then when it announced on last Friday, it's now down to an $81 stock. But there's a lot of room for rebound. Just look for the right price points. I mean, if you can get into these stocks as they've come off their highs, especially the ones that have had good earnings and are set up well going into the next quarter, it's very likely that this is a temporary setback or correction in this sector, and you're going to do very well. A couple of them that I like, Goldman in the low 390s or high 380s would be a phenomenal purchase. Schwab in the high 60s would be a great purchase. And then M&T in the low 130 range, I think is a good purchase. All of those should return at least 5 or 6% this quarter if bought at those price points. So that's where we are today. Good luck with your trades. Leave me a comment if you have any questions and subscribe to the channel.